Hello traders, in this video I'm going to be sharing with you an amazing way to trade trendline breakout, getting other confirmations like powerful zones below this. So this is not just an ordinary trendline break here, but we have taken into consideration some very powerful factors that give this high risk to reward winning trade. So I'm going to be sharing with you in a second how to trade trendline breakout with high accuracy, with other confirmations that actually push price up like this. All right, so let's head into it right away. Okay traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Basically, in this scenario that I'm going to demonstrate to you guys, you are basically going to see we are going to use support and resistance, which actually acts as a catalyst to the price movement in this situation. Right now, you see that if you go to the daily time frame, sometimes price in the daily time frame sometimes will be moving within a particular panel or channel like this, right? And now in the daily time frame, this move in the daily time frame could be a trending market in a smaller time frame. All right, meaning that in a smaller time frame, price could be moving like that. Okay, maybe in the H4, which will give what a trending market. All right, so you can either consider this to trade as a trend, or maybe you look for trendline breakouts. Okay, now I'm going to show you exactly what I'm talking about. Now we have to take advantage of this, all right, because when price comes down and hit a support like this, for instance, there is a next possibility that price is going to hit right up. Now if you had a possibility, let's say you had a trend line scenario here in which you drew, okay, price was maybe trending and then it was trending like that. Okay, once price come and get rejected in this zone here and goes and breaks this trend line, there's a possibility of price hitting right up. That's exactly what we saw in the example. Right now, let me show you what I'm talking about here. Now this volatility here, now we go to the daily time frame, which is the daily time frame. Now if you look at it critically, you are going to see that price is within this channel, right? Price, normally we had a strong uptrending market and price within that channel, and this channel in this time frame could be like a rectangle. It could be like a rectangle pattern, which is also a continuation. All right, when price price usually hit up sometimes, okay, and then it forms something like a rectangle, and then when it breaks, okay, sometimes you could form patterns, and that's how price continue. So this is like a rectangle pattern. Now you see that when price rejects here, it comes back, it rejects here, it comes back, and then it goes. Right now, how do we identify this entry scenario here? If you drop now to smaller time frame, like I said earlier, these are whole trends. Okay, these are whole trends on their own, right? We are not entering based on this time frame, but we are looking for confirmation. Now look at what I was saying. Now in the daily, when price move, you see it is a trending market. You can be catching sell trade up setups until you get to this point here. You start taking buys. Right now, further we move further to smaller time frame, let's say the 30 minutes time frame, where you can catch very good entry probabilities setups. So in a smaller time frame, we already know what happened in the bigger time frame, right? This could also be a trend line breakout, but this one is not too sustainable, right? You can still consider this to be a trend line breakout, right? Because price rejecting broke out, but now we want to get a high confirmation. Now you see that price continue going down. Now as soon as price hit this zone here, after creating series of higher highs, higher lows, what I did was what you simply connect. Right, so you connect like that, you wait now for price to break out. Now price is reacting to a bigger zone in a higher time frame, which will eventually push price right up there. Okay, so when price comes now, you don't want to be selling. You cannot sell here again, because there's already there's already a force that's going to push price up. So for someone who did that multiple time frame analysis, should know that in this case you cannot sell. You can be selling as long as price comes down here, right? You can sell, maybe move, but as long as price has rejected to this zone, you cannot be selling. So what you do now, wait for what a confirmation. All right, a confirmation could be based on the candlestick power. Now look, we have a very strong bullish candlestick momentum here that closes. So you see that price went up, got rejected, came back and closed above the zone. So you can use this to be a violent breakout. Now there are two ways in which you can target your trade based on this, right? you can take it to be like maybe a swing trade that will run for days, right? This could be the first target when you enter, right? Because we have had a rejection, we have had confirmation. Now if you enter based on this, right, this is how you are going to target, because this is a violent breakout. So you enter, your stop loss will be below these candlesticks here, right? Your stop loss should be below the candlestick, and then your target should be at this previous high here. That is a complete swing trade that can give you like 1:8, 1:7 risk to reward ratio. That is one way to enter the trade if you have, your account can sustain that. The second way is you enter based on this trend line confirmation, and then your stop loss should be below the candlestick that broke out. Like you can see there, we have this bullish candlestick that closed above the zone, right? Okay, so this is a bullish candlestick that closed. Now the second entry, you can enter based on this candlestick break, and then you place your stop loss below this candlestick that closed. Now in this situation, you should look forward the next high, the next rejection zone, which is this one. This is the zone that led to price dropping so powerfully like this. So you identify it, and then that's where your target is going to be, the first target. So this second entry, your stop loss below the candlestick, your target is up here. But if you want to use the swing strategy, your stop loss should be below this zone, and then your target there. Now your stop loss below this zone, because it's swing trade and it's going to form patterns. It can go and even pull right back to this zone here. So you see now that price move up powerfully. Someone who did not do a multiple time frame analysis will not know that this is the force that's pushing price up. So that's one of the best way in which you can trade breakout, where you understand other key levels in a bigger time frame. So from this information, you can see that trading this breakout here is not as sustainable as trading this breakout here. You can see how price move, and if you are greedy, you'll be targeting those zones and all of that. So you can see how powerful and simple the strategy is. So all right, so basically that's what I have for you guys. I hope you found the video helpful. Please subscribe, click on the like button, notification bell, so that each time I post video, you're going to get a notification.